Alright, welcome back. You're watching The Money Show. There are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have on board Harshvardhan Roongta, CFP Roongta Securities. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Good evening, Harsh, and welcome to the show. And we have our first viewer online with us, Nilesh. Hi, Nilesh, can you hear me? All right. I don't think we have him on the call, but then his question is there. He's investing in mutual funds for last 5 years, and he's accumulated a corpus of 5 lakh in last 4 years. He wants to pay off his education loan of 15 lakh in next 5 years. He wants you to suggest some funds, and he's also looking at investing 20 to 30,000 per month.
Kavita, ideally, if he had shared his existing portfolio with us, maybe we could have suggested some increment in his existing scheme itself because he says that he's been investing since about 4 to 5 years now. Nevertheless, he intends to pay off his education loan. That is what he has mentioned in his query, and he wants to invest about 20 to 30,000. And he has a 5 year horizon again. So I guess he can definitely choose equity as an asset class to invest into. And I think when he accumulates that kind of money, he can think of part repaying or full repaying his education loan. In case the markets don't do well after 5 years, he can just continue investing, and as and when he gets a positive return on his portfolio, he can at that point in time repay his education loan. So I'll give him two schemes, considering I don't know his existing portfolio. However, I'll give him two schemes so that he can consider investing them for this purpose. So one is SBI multi-cap fund in which he can put a 15,000 every month, and Canada Robeco emerging equity fund in this he can put another 15,000 and continue for 5 years. As in when he gets the corpus accumulated, he can part repay or full repay the education.
We move on to our next question. Suman has sent us his question, and he's 32 years old, and his monthly income is 58,000, and he wants to invest maximum of 20,000 per month in mutual funds. He wants to have a corpus of 70 lakhs in 10 to 15 years. Currently investing in PGI mid cap, SBI Magnum mid cap, SBI small cap, and he wants to know if he should be sticking to these funds for his corpus.
So Kavita, ideally, in my personal opinion, I do not think this is the right way of constructing a portfolio. So, and an investor should basically try and diversify across different market segments and also across different fund managers. So, you have about 40 fund houses offering their services. Most certainly, you could look at even diversifying across different fund managers to get the fund manager expertise as well. So, what I suggest, he could invest in the following manner. He has these things. I'll just rejig a little bit. So SBI small cap, he continues as it is. PGI mid cap fund, again he continues. I'm just replacing one SBI mid cap fund for a simple reason so that he gets a fund house diversification. I've also retained the aggressive nature of his investment, but in a flexi cap strategy. So he could use an ICICI Proof focused equity fund in place of SBI Magnum mid cap. The rest other two schemes he could continue. Now, as far as his goals are concerned, in 10 to 15 years, he wishes to accumulate 70 lakh rupees. But I think in his current investment, he should be able to accumulate that comfortably.
All right, we move on and we take Deepak's question. He's been investing in mutual funds for 5 years now. He's collected 4 lakh corpus, and he wants a total of 50 lakhs in next 10 years to fund a property purchase, and he can invest 30,000 each month. He's right now investing in SBI small cap, SBI Magnum mid cap, Quant small cap. I think it's a similar set of funds in terms of categories. So a lot of investors are actually banking on mid cap, small cap, and this seems to be even the first choice of fresh investors. Harsh.
So Kavita, this actually kind of draws a concern for me. Because mid and small cap category are good. It's not that they're not good investment segments. The only point is that have you understood the volatility that is associated with them? So most often, in all the queries that we take, we will realize that people have only looked at the past returns, the immediate past returns, thinking that the same kind of returns will replicate in the future as well. So that may not be true. So ideally, an investor should invest across different market segments and also allocate across different segments. So if you're a risk averse person, you might probably want to invest higher quantities in large cap and then little lesser in mid and small cap accordingly. So I think that's the right way. You should not assume that something that has happened in the past will continue in the future and get the same kind of return. So in case of Deepak as well, I'll make certain changes just for the sake of balancing the portfolio out completely. SBI small cap he continues, of course. Now, in place of SBI mid cap, again, only for the sake of diversification, fund manager diversification, he can invest into Kotak Emerging Equity Fund. So this is also an equity fund, mid cap equity fund, but from the Kotak fund house. And one small cap, you replace that with ICICI Pru Focused Equity, again for the same reason that you will have a different fund house. At the same time, you retain the aggressive nature of the investment with a flexi cap strategy. So with regards to his target, which is 50 lakhs after 10 years, the current investment should enable him to accumulate that kind of.
Amit Soneja, and he has in total 8 funds. I think you have the list of his funds. He's got 2 small cap, he's got one multi-cap, mid-cap, large and mid-cap, and flexi-cap funds. He's got Balance Advantage Fund and Access Growth Opportunities Fund also. So he says that he's already 51 years old and he's been investing through SIP, and he wants to understand what could be the amount he can expect. He's talking about a maturity amount in terms of within 5 to 7 years, how much would he be collecting with this amount?
Yeah, so coming to two elements. One, of course, we will consolidate his portfolio a little bit. He's investing 72,000 rupees per month and 9 schemes. Mr. Amit, you must understand that at one point in time, there will be some coordination and administrative work between all the different schemes that you have. So better to just consolidate it, keep it simple, and just to reduce your administrative efforts that you will put in the future. So your 72,000 could be invested in such a way. All the 5 schemes that I'm going to name now are out of your existing portfolio. So you don't have to add any new scheme. Just change the investment amount in each scheme. HDFC Multi-Cap Fund, instead of 8,000, now you'll invest 12,000 in it. Parag Parikh Flexi Cap again at 12,000. Axis Growth Opportunity Fund 12,000. SBI Contra Fund 12,000 and HDFC Balance Advantage Fund 24,000. So that's how your 72,000 is going to be invested henceforth. All the other schemes that you invested, just redeem out of them and consolidate into these 5 schemes itself. With regards to how much can you expect, well, any investments that you make in mutual funds, whether debt or equity, there is no guaranteed return that you can assume, or even it will be you cannot really estimate what an equity will perform in the next 5 or 7 years. However, if you have to take some estimation and try and get some ballpark figure, probably a 10 to 12% kind of return, if you estimate between 5 and 7 years, is something that you can. And if this was to happen, you could expect a 55 lakhs to 85 lakhs within 5 and 7 years that you're looking at.
All right, last question. Rishi Baveja, and he's an NRI and looking for best ways to invest in mutual funds, stocks to save taxes, and he wants to know what will you recommend. He also has a regular rental income in India. So what should be his strategy?
Yeah, Kavita, NRIs can most certainly invest into India. There is no doubt, or into mutual funds more particularly. And since he wants to save tax, the ELSS fund offered by mutual funds can most comfortably be chosen to invest to save tax under ETC to the extent of 1.5 lakh. Now, the only question would arise, we don't know whether he's a US or a Canadian resident. Only in case you're a resident of US and Canada, there are certain restrictions in terms of not all fund houses accept investments from US and Canada residents. There could be some instances wherein a fund house will require you to be in India while you're investing. Some fund houses accept money even when you're not present in India physically. There could be a situation where only lump sums are accepted and SAPs are not accepted. But nevertheless, overall, to say that if you wish to save tax, you can invest into an ELSS fund and through mutual funds, and you can also take the advantage of equity over a longer period of time. So lots of options are available. It's not a problem. Just that you'll have to identify depending on your residency. In case you're not a US Canadian resident, then there is no problem at all. In case you are a resident of these two countries, then there is some restriction, but there are ample of options available which you can choose.
That will be all. Thank you so much, Harsh, being on the show today, helping our viewers with their financial portfolio queries. And on that note, it's a goodbye. I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your questions. Thank you so much for watching. Goodbye.